This is Marshall Gittler, head of investment research here at FXPRIMUS, bringing you my daily comment for Thursday, December 17th. Well, with all eyes on the momentous FOMC meeting, I thought I'd look at the decision process for another central bank meeting taking place, the Norges Bank. The executive board of the Norges Bank meets early Thursday. In fact, it's probably met already by the time you watch this video. So I'll just discuss the background to their decision so you can better understand what's shaping the decision-making process and how the currency might go going forward. The majority of the economists polled on Bloomberg see no change in their policy rate, although a few predict a 25 basis point cut. Now, Norges Bank is the only central bank in the G10 that's hitting its inflation target. So in theory, there should be no question about it cutting rates. But inflation isn't the only thing that takes into account in setting policy. The problem for Norway is that so much of its economy depends on the oil and gas industry. Energy accounts for 64% of the country's exports. Now, while direct employment in the industry is just a small part of the total workforce, a lot of other workers depend on people who work in the industry or companies that supply it. So in total, about 9%, almost 1 in 10 of the labor force, is somehow tied to oil and gas. Additionally, investment in the petroleum industry accounts for some 7% of GDP, and unfortunately, it's falling sharply as oil prices collapse. Moreover, investment in other industries on the mainland track investment in the petroleum industry rather closely, so that's likely to fall too. The Norges Bank has repeatedly emphasized the need for the country to rebalance its economy away from the energy industry. Unfortunately, Norway is a victim of the so-called Dutch disease. As the oil industry became more and more of the economy, unit labor costs rose and much of the country's industry became uncompetitive. So Norges Bank probably hopes that the company can become competitive again through a weaker currency, which would encourage non-oil industries. I expect that it'll get its wish. Dollar NOK and Euro NOK are both closely correlated with the oil price. I might point out, too, that falling output and prices in the oil industry mean less revenue for the government. That means pain on the fiscal side, too, which makes it even more urgent that the central bank should support non-oil activity. In short, I expect that Norges Bank will continue to take the bigger economic picture into account when setting interest rates, and even if it decides to keep rates unchanged, it's likely to express an easing bias. That, plus falling oil prices, should keep NOK under pressure against both the US dollar and the euro in the near future, in my view. This is Marshall Gittler, head of investment research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.